Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. First up, Serbia and Germany have signed monumental strategic agreement during the Raw Materials Summit in Belgrade. The 6 billion euros investment focuses on raw materials, electric vehicles, and battery production. Meanwhile, Spain has unveiled a 2.3 billion euros plan to accelerate its green hydrogen and renewable energy sectors. This initiative includes significant subsidies aimed at bolstering the country's green energy production, particularly in rural and agricultural areas. In the digital economy, a Eurostat pilot survey reveals that 3% of people in the EU worked via digital platforms in 2022. This survey highlighted that digital platform work is more prevalent among those with higher education levels and men. However, over half of these workers lack adequate social protections, underscoring the need for regulatory attention. Turning to Hungary, the country's construction output volume increased by 7.2% year-on-year, despite a 3.8% decline compared to the previous month. The global gas market saw a 3% increase in demand year-on-year in the third quarter of this year, driven mainly by Asia. However, supply volatility, underperforming LNG production, and geopolitical tensions have led to a surge in gas prices. The global demand for gas is projected to grow by 2.5% for the full year, with significant contributions from Asian markets. The World Economic Outlook update projects steady global growth at 3.2% for this year, with a slight increase to 3.3% in the next year, while emerging markets like India and China are driving growth. Challenges such as global inflation and fiscal vulnerabilities persist, along with concerns over unilateral trade measures. In Hong Kong, the jobless rate has remained steady at 3%, indicating a stable labor market despite global economic uncertainties. Serbia's external trade figures for 2023 showed a mixed picture. A 0.8% growth in USD terms, but a 1.7% decline in Euro terms. However, exports increased by 6.5%, while imports decreased by 3.2%. According to a recent survey, over 40% of Japanese businesses have no plans to adopt artificial intelligence, despite its potential benefits in addressing worker shortages and reducing labor costs. Concerns over cybersecurity and the high cost of implementation are major deterrents. India has set an ambitious target to attract $110 billion in annual foreign direct investment over the next decade. Despite recent challenges, India aims to solidify its position as a major manufacturing hub, focusing on sectors like electronics, automobiles, and green energy. An exciting news from Italy. For the first time, renewable energy has surpassed fossil fuels in power generation. And on June 22nd, Italy hit a peak renewable output with hydroelectric power. Over to France, where the latest S&P Global Business Outlook survey paints a picture of subdued optimism among French businesses. With the lowest output growth expectations in Europe, French firms remain cautious. The net balance of optimism stands at just plus 13%, with limited plans for recruitment, capital spending, and R&D. While inflation expectations are down, profit forecasts remain pessimistic. In Turkey, the international investment position as of May shows a mixed picture. External assets rose by 1.4%, but liabilities surged by 10.2%, reflecting a growing economic challenge. The International Energy Agency has released its latest report predicting a 4% growth in global electricity demand for both 2024 and 25. This surge is driven by economic growth, heat waves, and increased adoption of electric technologies. Notably, solar PV is expected to meet half of this increased demand. However, despite the rise in renewables, coal power will likely remain stable, leading to a plateau in CO2 emissions. In the UK, inflation remains steady at 2% for June, surpassing analysts' expectations. Services inflation stands at 5.7%, while core inflation holds at 3.5%. Luxembourg's latest bankruptcy statistic revealed a 6% increase in the first half of this year, with 570 cases reported. Job losses surged by over 31%, while liquidations saw a dramatic 83% decrease. Lithuania's international trade data for May shows exports at 3.22 billion euros, resulting in a trade deficit of over 200 million euros. In Turkey, wealth per adult skyrocketed by over 157% between 2022 and 23, as reported by UBS Global Wealth Report. Despite nearly 72% inflation and significant currency depreciation, asset values, particularly in real estate, surge. This increase outpaces other nations like Qatar and South Africa, highlighting how inflation can inflate asset values, benefiting property owners even as purchasing power diminishes. In the US, wholesale price inflation has surged to its highest rate since March 2023. The producer price index for final demand increased by 0.4% month over month in June, driven largely by a 1.9% jump in the trade services margins. Jordan's industrial production index rose by 3.32% in May compared to the previous month. The manufacturing sector showed a mixed performance with increases in certain areas, offset by declines in others, while the electricity sector also saw varied results. And lastly, in Slovenia, total goods sales turnover declined by 1.3% in 2023, amounting to 35.1 billion euros. The wholesale sector experienced a 3.6% drop, while retail trade saw a modest increase of 1.9%. Thank you for watching, and remember to subscribe to our channel for the latest updates.